Okay, let's talk about modifications because I cannot tell you how many times I jump up and down and scream at people, stop doing these modifications. And they are a short fix to a long term problem. And if you are having issues in paying your mortgage payment, maybe they've doubled or your mortgage has gone up. There's a lot of reasons why people will think that they have to do a modification. Maybe they got a loan back in 2005, 6, and 7 that were horrible. They were interest only, and now they've reset and they've been paying them for a while. Maybe they did an 80/20 loan, which was you get literally two loans, and one of them is an interest only, and the other one is anyway. You've got a bad loan and you need to do something because you can either not pay it anymore, or there's a balloon note, or something is happening why you would need a bank to go back and remodify your loan. And so, what you're asking the bank to do is you're asking them to change the terms of your loan. Maybe your loan was 7% interest and it was an interest only. And so for the first 15 years, you were paying interest only. And now all of a sudden, you're having to pay the principal on it. And so now your payments have probably doubled. And so you'll go to the bank and you'll say, look, can you refinance this property? And they'll tell you no because your house isn't worth it or whatever. Maybe you have bad credit. There's a reason why you can't refinance out of this property. So you're asking them to do a loan modification. So let me tell you about loan modifications. Let's say you had a loan at 7% interest. They will modify it. They'll go, okay, you owe us 200,000 at 7%. Now you'll owe us 200,000 at 3%. But what we're going to do is in 15 years, we're going to tack on all of this interest compounded monthly um, into one lump sum that you're going to owe us. Or they may tack it on as a lien on your property, but not part of the loan. So there's no way to pay it off. It's just like there's an extra lien on the back of your property. So you could live there for 30 years and pay off your loan. But then if you go to sell it, there could be this extra amount that you owe for all of that interest over the life of the loan. And that's what they're looking for. They're not modifying it and forgiving interest or principal. They're just restructuring this loan for the short-term gain, right? So what I'm seeing here lately is like the couple I'm helping right now, they did a modification back in 2018. They lowered their interest rate so that they could afford that payment every month. But what they did was they added a $118,000 balloon payment that they modified their loan so that instead of 200,000 they only owe 150,000 on this loan, right? And so what they did was they added that extra 818,000, and that was, the over the life of the so if I gave you 50,000 today, in 15 years it'll be worth 118,000. So just keep that in mind. So that was that 118,000 that they have said, look, in 15 years this is what you're going to owe us. They also modified the interest rate. So on top of the 118,000, they are adding all of this interest that they're missing out on the next 15 years compounded, and they're going to add that to that 118,000. So right now, yes, you're okay. They've modified this payment where you can afford it, but in 15 years, you're going to owe them about $200,000 and no way to really refinance or pay it off or anything other than selling the home and hoping to God that it's worth enough that you can pay off the rest of your loan and this amount. But you also have to think these people bought this house back in 2005, and so they're already underwater. Right now on their loan, they owe exactly what it is worth. So they're already underwater. If they pay that loan off in 15 years, they still owe another 200,000. So what I tell people all the time, it's about a life of stress-free, not having to worry about this mortgage payment. And do you want to rip a Band-Aid off slow or fast? Right? So if you're ripping a Band-Aid, you just need to rip it off and say, I'm over this. I need to do something now. Because what you're doing is you're only fixing it for the time that you need. And maybe you do need another 2 years before you can do a short sale or go through foreclosure or whatever. But you have to think about what your long-term plan is with this house. And I'm seeing a lot of people not thinking about that. They're only thinking about today and how they can fix this problem today. And it causes more issues later on down the road. And I tell people all the time, you're jumping off of a cliff no matter what you do. And it depends on what you do today, how hard you hit in 15 years. And so you may have to end up claiming bankruptcy in 15 years. Whereas if you had just either sold the house, went through a short sale now, and got rid of the problem and found a rental for another year, got your credit up, and went and bought another house that you could afford that isn't such crazy interest and crazy loan, it's better than in 15 years. You may be at the age where you'll never be able to buy another house. Maybe you'll be in your 60s and, on Social Security or whatever. So you need to think about what today is going to happen, not in 15, or you need to think about the 15 years out or even 20 years out, not just today and how you're going to fix today. So, when you are thinking about a loan modification, I counsel people all the time. I give them all of their options and what those options look like. So if you do this now, these are the ramifications that's going to happen right now. If you do this next year, this is what's going to happen. And if you do it in 10 years or 5 years or whatever your long-term plan is, this is what it's going to look like. So do you want to be 65 doing a short sale? Your car's on its last leg. You can't afford a car payment. So you need to think about these things. So if you ever need help or anybody who ever needs help or just counseling, like I do this stuff for free. I'm trying to help people stay out of trouble because these banks will not tell you this stuff. So next, I think we're going to talk about forbearance.